So statistically, 99% of the time, someone's telling you to trade, but you shouldn't. And 1% of the time, everything moves, but generally people can't predict when that 1% is. It'll happen when you least expect it. So trading is, in my opinion, a fool's errand. I think it's a very dangerous thing. And most people are going to squander their capital because they're going to try to outsmart the market. And I think stock picking is equally challenging. I just laid out, there's 7,000 publicly traded companies. If you take out the 7 best ones, there is no return. 99.9% of the companies can't beat inflation. Okay, so we know which ones can, like Apple, Google. But the question is, did you know that 10 years ago, the reason I was able to buy 17,000 Bitcoin is because I was able to pick Google and Apple and Amazon in 2010 and hold it for a decade with a lot of money, right? But on the other hand, if you picked Amazon in the summer of 2020, you didn't make any money. You know what happened in the summer of 2020? I tell you a real story. It's like when my 3 or 4 year old niece, when she said to me, I like the Big Apple, this was like 2010 or 2008. I said, wow, it's a young girl and she's saying she likes Apple. This means Apple's a big deal. We should load up on the stock. And that was when 98% of the world, or 99% of the world, didn't agree, and they thought it was a stupid idea, and Apple was valued at like 8 times cash flow. And you could have bought 800x from there or something, just ridiculous. But I thought, yeah, this is a good idea. And I wrote this book, The Mobile Wave, and I actually tell the story in the first chapter of The Mobile Wave about how, my young niece thought Apple was amazing. She called the Big Apple, that was the iPad. And I thought the Big Apple had been New York City, and now the Big Apple is iPad, and this is a big change in wealth. Okay, so that was a good entry point because nobody agreed, but it was unstoppable. That's what I say. The best investment is something everybody needs, nobody can stop, but nobody understands. Right? That's what Apple was. That was what Facebook was. That was what Amazon was in 2008, 2010. Now, in the summer of 2020, you know what my niece told me? She said, I'm buying Amazon stock. Everybody knows it's a winner. Because everybody's in lockdown and they're all basically ordering, like they're ordering their food in, they're ordering their groceries in. Okay, so everybody knows, every 20-something investor, every Gen Z person knows that they should buy those stocks. Well, it didn't work, right? Because everybody knew it, everybody agreed, everybody needed it, but everybody understood they needed it. And so, in fact, what you've got 36 months later is you have all the logistics challenges, the supply chain challenges, the labor challenges, the inflation challenges, the manufacturing challenges. Everybody needs it, and everybody understands it. But, if the criteria was, do you need it and do you understand it, the richest people in the world would be investors in water companies and electricity companies, because everybody in New York City needs water and power. But name me one billionaire in the 21st century that's a water billionaire or electricity billionaire, And the reason why is because everybody understands it. And once everybody understands it, it's getting regulated. And once it gets regulated, it's not an unregulated monopoly. It's a regulated monopoly. They're not going to raise their prices. And people aren't going to, they pay less for their electricity or whatever than they're going to pay for their whatever favorite streaming video thing that's the fad. So, I think that when people, they talk about, the recession's coming or whatever, they're attempting to out-stock pick the market. They're attempting to out-trade the market. They're feeding on your gloom and doom. What do they want you to do? Sell your scarce desirable assets and buy the dollar? They want you to go short are you going to sell London real estate to buy the dollar? No, or they want you to sell your desirable assets and give the money to them. It's like, I wouldn't trust anybody that basically comes to me with doom and gloom and fear and says, whatever your idea is going to zero, so give me your money. You see, the difference is I'm not asking for your money. I'm telling you, keep it yourself. Just, don't blow it. So if all these things happen, then the governments of the world are going to print more money to solve the problem. If there's war, if there's recession, they're going to print more money and it'll drive up the value of scarce desirable assets. If none of these things happen, they're still going to print more money, right? In good years, they're going to inflate the currency supplies, and bad years are going to inflate the currency supply more. And, if you look back for the past 100 years, if you could have bought an acre of real estate in New York or London or Tokyo, at what point would you have sold it? Never. There would have been booms and busts and crises and recessions and whatever. But, the only winning strategy is you hold the most desirable asset for the longest period of time and you let everybody else panic sell. And I think that's the case with Bitcoin right now. I mean, you hold on to it and let everybody else, trade 7,000 different razor blades.
Hey, money talkers, get ready for the lowdown on Bitcoin's battlefield. I'm your crypto commander, and today we're diving into the drama below $37.5 thousand. Is the king coin gearing up for a triumphant rally, or are we on the brink of a crypto cliffhanger? Let's unravel the tale. Picture this. Bitcoin's stuck in a mighty triangle pattern, and the bulls are flexing their muscles. The chart's yelling bullish with higher lows and a sweet ascending trend line since October 25th. It's like a crypto superhero stance. But, and there's always a but, that pesky $37.5 thousand is playing hard to get. Bitcoin's been dancing below $37.5 thousand, teasing us with higher lows. It's like a game of cat and mouse, and traders are itching for a breakout. The triangle's hinting at a bullish bonanza aiming for $42,000. But wait, there's a fortress ahead. $41,000, $43,000 is a resistance zone. Fibonacci levels are cheering from the sidelines at $41,000 and $46,000. The market's in a bullish mood, folks. Higher lows, check. RSI above 50, check. On balance, volume rising, check. Check in money flow doing the cha-cha with plus 0.08, check. It's like a crypto carnival, and the indicators are leading the parade. But a note of caution. A daily close below $35.4 thousand could flip the script to bearish. Now let's peek at the exchange chessboard. The past 10 days were a battlefield, more Bitcoin leaving exchanges than entering. It's like a treasure hunt, with traders snatching up Bitcoin and stashing it in private wallets. Accumulation alert. This could be the precursor to another price hike. The plot thickens. Crypto Crusaders, that's the Bitcoin saga for now. Will it conquer the $37.5 thousand resistance and soar to new heights? Or is a market shakeup on the horizon? Let's continue our discussion with Michael Saylor.
I think it takes 20 to 30 years for a new technology to diffuse to 80% of the world, or 80% of the educated world. So I think you got to look out over the course of a generation. William Gibson has a famous phrase. He said, the future's already here, but it's not evenly distributed. And so what you have is you're always going to have some people that are going to be very hypersensitive to new technology and others that are going to go slower. There are plenty of people with a lot of money in the US and Europe that don't have smartphones, right? And so the smartphone revolution really kicked off in 2010, and that was 13 or 14 years ago. 2009 was the iPhone 3. So 14 years ago was the smartphone revolution. And if you ask anybody in their teens or 20s or 30s, of course, they grew up with these things. But you'll find a lot of people in their 60s, 70s, 80s that don't have smartphones. And especially, do Warren Buffett and Charlie Munger, do they have smartphones? Like about 4 or 5 years ago, they bought Apple stock, but they still haven't bought Microsoft stock. So, but what do they have? They have $1 trillion balance sheet. So there's a lot of money in the world that's in the hands of people that don't use the internet, that don't use smartphones, that aren't definitely tech savvy. And so there's going to be a long tail call it a 20, 30, 40-year tail where that money is going to gradually get invested and reallocated into the Bitcoin ecosystem. But it's not like in 24 months, everybody with money in the world wakes up and realizes this. And I've said, so what's the right forecast? It's highly likely that what you have is a serpentine growth, right? Where you're going to grow with a slope of 40 or 50%, and it's going to be cooling down from 45 to 40 to 35% to 30% to 25 to 22 to 20% annualized over the course of the next 20 years. It's like something like that, but you won't get a perfect exponential. What you'll get is a surge up followed by a crash down, and you'll have this serpentine pattern growing. So there is a cycle. What will drive the cycle? Lots of dynamics. A regulation will drive the cycle. Halvings will drive the cycle. Awareness will drive the cycle. I mean, Apple will drive the cycle. Big tech will drive the cycle. Technology will drive the cycle. War will drive the cycle. Panic, hyperinflation will drive the cycle. And it'll look different depending on what country you live in. For example, Bitcoin is already at all-time highs in places like Argentina, or Lebanon, right? Or if your currency collapses, you're already at the super cycle all-time high. But in other places, it isn't. So you got to consider frame of reference. So I don't think this is a problematic thing. What it means is, if you're trading Bitcoin with a time horizon of less than 48 months, then there'll be some point where you might be underwater in your latest purchase. And the important point is not to panic and to look out 10 years. And at the same time, the world's not going to be rational overnight, but you don't want it to be rational overnight, because statistically, you're much better off if Bitcoin gradually adjusts up between now and 20 to 30 years from now, if it gradually matures, because that gives you 30 years to dollar cost average. Yeah, you've got 30 years of earnings ahead of you, and you can sweep those cash flows into Bitcoin at a discounted price, right? And you've got 30 years of alpha, of knowledge. You're always going to be smarter than the person 25 years ahead of you who isn't sensitive to the crypto economy, hasn't figured it out yet. And there are a lot of these institutions and governments. Think about it. There are large insurance companies and large governments and bankers. They're going to be 10 years or 20 years after everybody else because there's so much inertia in their governance, right? They might actually evaluate a new idea every 3 years and take another 3 years to study it and implement in another 3 years. And actually introducing a new Treasury reserve asset in 9 years, that's pretty fast for a country.
The European Banking Authority, EBA, has recently launched a new consultation process concerning implementing the so-called travel rule for cryptocurrency transactions. The institution is seeking feedback on the defined procedures that crypto asset service providers, CASPs, must complete to collect the needed information to comply with the travel rule and the actions they must take when getting this information is not possible. The crypto community was initially baffled by the massive fee of 83.65 Bitcoin, originally attributed to a costly mistake. However, recent revelations paint a darker picture. According to a social media account on X called at 83_5 BTC, hackers stole the funds from the unnamed individual and immediately swept the Bitcoin to a different wallet. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.